Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to give you the market recap video for the last day of August, August 31st, 2015. And what a month it was, posting the worst month, 6.3% decline in the financial markets from the month of August, the worst month that it had since May of 2012. And that really doesn't even tell the whole story here, as the market literally screamed down throughout the month, posting a steep decline all the way down to about from the highs from a couple months ago to about a 12% decline. That's in your bear correction area. But even just last month, about a 10% decline in the marketplace total before it rebounded, as you can see, all the way from 1820 up to 1965 to currently 6.3% decline. And you've been seeing a lot in the market lately about the recovery. And I cannot disagree more with that. Stocks do not, and the market doesn't do this. It does not have a V-shaped recovery. It doesn't V-shape down, V-shape back, right back up. That's not how it goes. You're going to have volatility. You're going to have movements to the downside, to the upside. And I certainly do believe that we still have a little bit more room to go down. And a lot of it is based on uncertainty. The uncertainty of the global markets. Many of the global markets are already in recessions, in bearish markets. What the Fed is going to do or what they're not going to do. There's a lot of uncertainty out there right now, and because of that, we're looking at a technical formation right here in the S&P 500 called the Kiss of Death formation. Now, it's on a daily chart, not a weekly chart. The most powerful bearish one is on a weekly chart. This is on a daily chart. As you can see, if you switch this out to a weekly chart, not necessarily the Kiss of Death. In fact, I still see this coming down before it recovers all the way back up to form the Kiss of Death on the weekly chart. I don't see that happening for a few months out from now. And you just got to realize there's never a market crash on a daily chart. They happen on weekly charts. Nothing ever crashes in a day. You have these wicked swings, absolutely. But right now, I see this market pushing to the downside as you see wide body candle, narrow body, downward movement in price. Regardless of what the reason is, that's pure technically a kiss of death pattern. In terms of what we're looking at here in the financial markets. And even today, most of the activity today, if you'll look at kind of the 15-minute chart here, most of the activity today happened last night, has been routine coming into the markets, coming on Monday morning. Last night, the Chinese announced that they're going to stop buying their stock market, basically saying that they mishandled the entire process, and absolutely they have mishandled that entire process. Still prosecuting people for shorting, but they're not going to be buying, and that really kind of let it down. And I honestly think that's a little overplayed. I think that's just the news, kind of selling off. There was not a lot of volume there. There was not a lot of volume throughout this up and down nature before the stock market opened up, and then we started having the volume here. I mean, just to kind of reiterate here, this is what happened last night in the market. The highest you had volume at about 14,000 in there, but now we're coming into here and we're talking, in the millions of contracts and so on and so forth. So, even though a lot of the movement happened last night, it was kind of flat for most of today, to be perfectly honest with you. And you did see a sharp rally in some capacity in the market today, and kind of random. And the rally was really here on crude oil. As you can see here it really started about 2 hours into the market, where you're currently pricing around $44.5, $45. And all of a sudden you have this huge movement back up to the top side, coming all the way into 49.33 before it started selling off a little bit. But if you look at this on the daily chart, big movement, and unless something automatically reverses, we can't say it's just going to automatically come back down unless we get some type of slowing momentum. And right now you got a lot of momentum behind the oil movement in terms of the financial markets that really drove it up. Now, in terms of the dollar kind of drove down a little bit. And we've been a few times we have been slightly bearish on the United States dollar, but when you're looking at the dollar with the strength of crude oil lately, the dollar kind of showing slowing momentum after its reversal from 93 to 96. But like I was saying, with the strength in the crude market right now, and the dollar starting to slow its momentum here, coming into a little bit of a resistance area right there at your moving averages, also an old support level here. It's been acting over here as well. We've actually said $96 was an important psychological level for the dollar many times, between 93 and 96, and then you have 96 to really kind of the 98 area in terms of the movements. And so I'm looking for the dollar to come down this week. Crude oil, nothing would shock me in crude oil right now, but at the same time, the momentum is quite quite impressive. Gold here, a little bit of a short-term retracement back into support levels. Starting to see a little upward movement up here, and so I'm looking at a little bit of a strength in gold and silver this week. A little bit of a weakness in the dollar, and the marketplace. I'm looking for the market to come down as well. So in looking at kind of tracking out the market, wouldn't surprise me in any capacity to see gold get back up into the 1160 area. Wouldn't surprise me in any capacity the dollar get back down into the 94 area this week. And as for the S&P 500 itself, I do have a bearish call on the S&P 500. I am short the market right now, and will be short the market until it gets back up above this key level of resistance right here, right around 1992. But you also have that overheading 2000 mark there. So if it gets back up above there, we might have to look to more neutrality. But in my estimation, it's important to have insurance on your retirement accounts this week. It's important to I do not expect the wicked swings this week that we had this last week. In the VIX last week, we were really kind of just all over the board, and we really kind of stuck in a little bit of a range, $2-3 range here on the VIX. I'm looking for that to kind of maybe peak up a little bit, but nothing like we saw last Monday in the marketplace. That was just a really historical movement in the marketplace as well. And we'll look at some currencies in the Forex report later on tonight. This week in the market, manufacturing on Tuesday. That's a very important economic report. Forecast is 52.6. I do expect that to come in slightly less than 52.6. And then we start our unemployment, our labor market, our labor economic reports with ADP non-farm employment change on Wednesday, trade balance on Thursday, ISM non-manufacturing on Thursday, unemployment claims on Thursday, the G20 meetings on Friday, FOMC member Lackert speaking on Friday, and then we get our unemployment rate, non-farm payroll, average hourly earnings as well on Friday. And that I'm looking at that very, very key on the unemployment rate, because it is expected to go from 5.3 down to 5.2. And if we see another decrease in employment, regardless of how you personally want to track that, you have to take that serious, because the Fed is still looking at that September hike here in a couple weeks from now, on the 17th, and whether or not they do or don't, they're still data watching, and which means we still have to be data watching for us as well. I expect a 50-50 probability between September and December. I do anticipate rate hikes this year though, and the Fed, if you're coming out of the Jackson Hole meetings from last week, they really didn't give us an indication one way or the other. Basically just data hunting, data watching, and it's getting a little dated and overkill a little bit with the data watching. But you know what? They're data watching. We have to data watch right now. And based on their reports, they're not going to wait till 2.0 inflation. They're going to do it before it gets to 2.0 inflation. And so when they say that, and multiple Fed members have talked about how the data provided they could justify a rate hike. The British have said that as well, and that would be an interesting little turnaround if the British. I don't expect that this year, more likely next year, but the U.S. is going to start raising rates, and it's going to be in September or December of this year, unless the market crashes. And if the market crashes, all bets are off. But if we stay neutral in any capacity or range band with where we're at right now, expect a rate hike sooner than later. and this is Matt Justice for Tackle Trading with the market recap video. And once again, just to recap that, crude, lots of momentum. Look for that to at least kind of touch into the 50 range. If it gets up above 50, you could really get quickly into that 53 to 55 range. For the dollar index, I do see some slowing momentum on the downside. Punching back up into resistance, looking for this to come down a little bit. On the S&P 500, same thing, but on the downside here. And then on gold, finding support at the 1120 area, currently at 1133. Upward movement in price. Look for that to get into the 1160, 1170 range. This is Matt Justice for Tackle Trading. Get in the game.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.